Hello, everybody. How's everybody doing? Welcome to Trading the Close. My name is Lawton Ho here at Verified Investing, filling in for Drew. Drew will be back tomorrow. I promise. I have 100% confirmation that Drew is going to be back tomorrow. And I am a little sick, so I do apologize if I sound a little funny. But before I go any further, please, I'd ask you guys to consider liking and subscribing to the Verified Investing YouTube channel. It really helps us out in the algorithm and helps let YouTube know that they want to see that you want to see more content just like this. All right, with that being said, we have a lot to talk about. First of all, jobs numbers came out this morning, better than expected, right? Unemployment down slightly, and we expected an uptick in the markets, and uptick they did. Straight to my charts, looking here on the S&P, we opened up a little bit higher, right? We opened up all the way up here at around 0.67% higher than than yesterday's close, right? Looking like, okay, we're gonna make new all-times today, a new all-time high today on the S&P, looking towards that $700 level. But what ended up happening was kind of unexpected. S&P sold off, everything sold off, and this is going to be the story of today, guys. Everything sold off. While it looked bullish, while it looked like it was going to make new all-time highs, it sold off, actually went negative, and closed the day virtually flat for the day. Right, we got as bad as down 0.5%, right, from yesterday before closing flat. But from the open today, we sold off over 1% on the S&P. And you guys can see we're still trading in this wedge pattern. If I had to guess, right, we get some bullish news in the next coming trading days, maybe early next week, we make new all-time highs, and that's where they get you. That's where I anticipate a potential bull trap and then potential breakdown on the overall S&P, breaking down from this beautiful wedge pattern that I've been talking about. Next up on the QQQ, we are also trading in this wedge. Still, this trend line, the bottom of this wedge is still providing a substantial amount of support resistance. Sorry, on the Q. Sorry, guys. Look at this trend line. Look how many times we've tested it. We tested it on Monday. We tested it yesterday, and we're tested it today. Initially opening up higher, touching that trend line before overall pulling back, just like the S&P, selling off over 1.4%. But the difference is we are actually closing slightly up, despite good job numbers, right? Despite potential bullish sentiment re-entering the retail space. Next up, let's talk a bit about the SMH. SMH here, we're trading in an upsloping parallel channel, and this is really, really interesting to watch, guys. We see that support starting the bottom of this parallel channel, starting at the Liberation Day lows, moving up here to the 21st of November, right? And on the top side of this, you had this pivot high here from the 29th of January, and all this consolidation all throughout October of last year. Now, the question is, what is the SMH going to do? Because we saw the SMH actually open up significantly higher, over 2% higher today. It initially popped and then dropped and eventually sold over around 2% from the open, but ended up closing positive. So where do I see resistance on the SMH? This is tracking all of the semiconductors. This is going to be your SOXX, SOXS, SOXL trade. But the top end of this upsloping parallel channel is going to provide resistance. So what I predict, right, and I'm just playing probabilities here, that we see the SMH continue to push up, find resistance, right? Find resistance up here, potentially make new all-time highs, and then pull back. What's up, Jojo? Hello to everyone in the chat. But yeah, that's where I see resistance, right, on the SMH. So if the semis continue to push up, make new all-time highs tomorrow, you know that I'm 100% going to short this. Next up, let's talk a little bit about the airlines. And the airlines have had a rough day, to say the least. You can see here, and I'm going to remove some of these drawings on American Airlines, despite moving up, opening up higher, almost 1% higher, sold throughout the day over 5%. Right. And I did a little research and I wasn't able to narrow down exactly what it was. But overall, I saw that, JP Morgan was predicting a recession, downgrading these airlines, saying that we might not see a lot more air travel in the future, right? As the economy worsens, right? Based on their predictions. Additionally, a bunch of flights were canceled in El Paso as their airport was closed for about 2 weeks. So something interesting to note, though, is take a look at this pattern, guys. Look at this amazing head and shoulder pattern here on American Airlines. If we take from the head all the way down to the neckline of this head and shoulders pattern. Now, this right shoulder hasn't completely formed yet, guys. We need this to continue to come down and break below for it to trigger. But let's say it were to trigger around here, around 1371. What is that measured move? About a 27% drop, basically to those lows in June. Now, is it going to get there? I think it certainly could, right? We know what happens what would happen if really bearish news came out, right? We saw American Airlines as low as around $8.45 in during the Liberation Day lows, right? So next up, taking a look at Delta Airlines. Delta Airlines, similar story, not quite that head and shoulders pattern that I just pointed out on American Airlines. But despite opening up higher, opening up almost 1% higher from the open, selling off over 5%. Next levels of support here on Delta Airlines. This nice gap fill just under $70. Let's say that Delta Airlines opens here and flushes below $70 tomorrow. I definitely buy it for a day trade. Additional levels here around $64.50. But the thing that's a little different with Delta than American Airlines is that Delta was trading at all-time highs and actually made brand new all-time highs today. Right, initially popping up above that 75, 78 previous all-time high before selling off. Now, this could be on the longer term, a bear trap, bull trap rather, which means it looks bullish. Things continue to push up, lures all the buyers in, and then the rug is pulled. But we won't know until we get a little more price data. Right. Next up, let's talk a little bit about the software sector. Hood, Unity, all these kind of companies were releasing earnings just around now. And yesterday we saw earnings come out for Robinhood. And you saw me react to that live. So, and I apologize, I am a bit sick. Hood falling decently here on earnings and ending up basically flat from the open, but at its peak was down over 13%. We saw this tremendous fall as all of the software companies took a big tumble, down over 29% in a matter of a trading week, basically, right? But despite beating earnings expectations, they did miss on revenue. That caused the stock to continue to slip. Now, let me give you a couple of trading levels on Robinhood. Robinhood, if it got down to this gap fill down here around $72.71, I would be interested in potentially a day trade. For a swing trade, I wouldn't touch it until pretty much the Liberation Day lows. Now, since those lows, we had a massive run up over 300%. It keeps going up. Let's see, over 400% from those Liberation Day lows, and then beginning to sell. Sell off. But I would maybe start nibbling with around the $50 to $45 range and continue adding all the way down to $30, just because I don't think Robinhood is going anywhere. Next up, let's talk a little bit about AppLovin, another software company falling, catastrophically with that software fall over 36% in basically 5 trading days, had a nice push up just to put out earnings. And I'm going to go a little closer, delve deeper here into this level where it bounced around for just under 409. And if we take a look, guys, what was the level? Why did it bounce there? We saw these beautiful high pivots from the 4th of February and the 6th of February just last week. APP missed. They did beat earnings and revenue, but missed the expectations of the overall markets, right? Obviously, or else it would have continued to push higher. But from those levels, fell down about 11% on earnings. Despite that, bouncing up here about 7%, right? But APP hasn't really moved. I wouldn't say 4% is a huge move from the close today. If it continues to push higher, I would look to potentially short this around $469. Last one we're going to talk about is Unity. Unity Software did put out earnings this morning, right? It opened up significantly lower. This is something we've day traded, has moved like a kind of like a meme stock, right? And the stock was down 27% at the open and actually closed the same place it opened, despite intraday selling off over 12% from the open. We were managed to catch that on a day trade. Garrett did day trade that, made a lot of money on that. But on Unity Software, next level of support, I'm looking, going back to the tried and true Liberation Day lows around $15.22. That's where I'd look to pick it up potentially on a longer time frame. Next up, we're going to talk a little bit about cryptocurrency. Let's take a look at Bitcoin and Ethereum. And I keep going back to this head and shoulders pattern, potential retrace, and these levels of support and resistance. And for me, on Bitcoin, this actually could be a bullish signal, right? Bull flag here, this kind of up move and sideways downward consolidation, at least getting some momentum to potentially retest this $80,000 level of resistance, right? But this is something to keep an eye on. Not too much movement here on Bitcoin. Got just below 66,000 today. We did end up trading that in the live day trading room today. And then we saw a nice move up from those lows, about a 3% bounce here on Bitcoin. But if it can stay above this $60,000 level, all right, that's the key level to watch. I do anticipate a bounce here. Moving on to Ethereum. On Ethereum, similar story, right? What's the line in the sand? That $1,800 level there on Ethereum. Ethereum did sell today, right? Is down about 2% from yesterday, right? But did sell off about 5 to 6% from the start of the day and had a nice bounce up, nice recovery, just like Bitcoin, around 3 or 4%. Similar pattern. Again, Ethereum is going to copy what Bitcoin ends up doing. So that's just something to keep an eye on. Not too much there. Next up, gold. So gold has been trying to break and hold above basically this $5,100 level. This is the key level to watch on gold. $5,100. We haven't been able to really sustain a move above this level. Right here, we see it move up, kiss there, pull back, right? Same thing, kiss there, pull back, kiss there, pull back. Today, we finally breached it, but are having some difficulty staying above it. That is going to be the line in the sand. Now, can gold go back to new all-time highs? I believe that the top is in on gold for now, right? Before a greater pullback, but we just have to keep an eye on this $5,100 level. Something similar with silver, right? Silver continuing to push up, has been unable to stay above this $90,000, not $90,000 level, $90 level, excuse me, this $90 level, trying to push up, but continuing to be rejected. This $90 level is what I'm watching there on silver. Same thing. If we can stay, if we can get a break above it, then, you know, you can talk about 108, 110, but it's going to be a while before we reach 120 again. All right. With that being said, thank you guys so much for joining me on this episode of Trading the Close. Again, my name is Lawton Ho here with Verified Investing, filling in for Drew. Drew's going to be back tomorrow. And one more thing to note, guys, I just launched a brand new earnings level service where you get all of my levels for earnings pre-market and post-market. Scan that QR code to learn more. We'll play a commercial. Please like and subscribe. And thank you guys so much for joining me. I'll see you guys next time. Bye-bye.
Earnings weeks can move markets fast. And the biggest mistake traders make is reacting after the move starts.
Before earnings, I map out key technical levels: support, resistance, pivot zones, and gap areas. These are the areas where price often reacts, especially when volatility spikes. So instead of guessing in the moment, you already know what levels matter for entries, exits, and risk management.
And that's what Earnings Levels with Lawton Ho is. A monthly service where you get the levels to watch before key earnings reports, so you can trade with structure instead of emotion.
No hype, just the zones I'm watching and how I'm planning around them.
Go to verifiedinvesting.com to learn more and get access.